All right, let's jump right into this. For what felt like forever, the fintech IPO market was basically a ghost town, dead. But then, just when everyone had written it off, something shifted. Suddenly, the lights are back on, and Wall Street is, all of a sudden, very interested again. So today, we're going to look at three completely different blueprints that companies are using to either go public or just dominate their market in this new world.
So, this is the big question, right? It's on every fintech investor's mind. Is this for real? Is this revival going to stick? Or is it just a temporary blip, a flash in the pan? To figure that out, we really need to get a handle on just how dramatic this change has been.
And I mean, you really can't overstate the difference here. Just last year, the market was on life support, no pulse, zero excitement. Fast forward to today, Wall Street is practically rolling out the red carpet. The demand is back. But why it's back, and maybe more importantly, who it's back for, well, that's where things get really, really interesting. Let's start with playbook number 1.
First up, we've got the redemption story. And the star of this show, the Winklevoss twins and their crypto exchange Gemini. Their IPO is one of the most surprising comebacks we've seen in a long time. It's a total paradox, and it tells us a ton about what the market is hungry for right now. And on the surface, wow, the numbers are just staggering. The company pulled in a whopping $425 million in its public offering. Now, in a market that was frozen solid not too long ago, that's not just a vote of confidence, that's a massive bet from investors who are clearly starving for a new story in crypto.
And the hype didn't stop there. On its very first day of trading, the stock price jumped over 30%. That is pure investor frenzy. It's the kind of thing that feels like a throwback to the wild days of 2021. But then,
and you see this. Yeah, you're reading that right. Gemini lost over $282 million in just the first 6 months of 2025. I mean, to put that in perspective, that's 7 times more than they lost the year before. And get this, their revenue is actually going down. So how on earth does a company bleeding this much cash pull off a blockbuster IPO like that? Well, to really get it, you need a little context. This is not their first rodeo. The twins' business history is kind of this long series of near misses and, let's be honest, outright stumbles. From losing Facebook to a stablecoin that flopped, an NFT marketplace that fizzled out, and some really messy lawsuits. It kind of seems like if there's a business banana peel out there, they've found a way to slip on it. So why the standing ovation from Wall Street? An analyst put it perfectly. They're like a boxer who's been knocked out 3 times, but still steps back in the ring and wins the round. See, investors aren't betting on past performance. They're betting on a new story. Gemini as the clean, regulated, institution-friendly crypto exchange. And what this proves is that right now, a compelling redemption arc can actually trump a sea of red ink. Okay, now let's do a complete 180 and look at a blueprint that could not be more different. Meet Lendbuzz, a company that's taking the exact opposite approach of Gemini. There's no hype here, no celebrity founders, just quiet, consistent success that's built on, actual profits. And you can see the contrast right here in the numbers. It's just black and white. While Gemini was racking up that $250 million loss, Lendbuzz booked over $11 million in profit. And even better, their revenue is growing and their net income literally doubled year over year. So what's their secret? It turns out they serve a group of customers that traditional banks just tend to ignore, the underserved borrower. Think about immigrants, recent graduates, or really anyone without a long, perfect credit history. While the big banks are saying no, Lendbuzz is using AI and alternative data to say yes to a car loan. It's not glamorous, but it is an incredibly effective business model. I just love this analogy. Lendbuzz is that indie band. They weren't trying to get on the cover of magazines. They were just focused on the fundamentals, on building a solid business in a forgotten niche. And now all that grinding, all that hard work is paying off with what looks like it's going to be a very successful IPO. So we've seen a redemption story and a profit story. But our third blueprint isn't about an IPO at all. It's about a totally different path to winning, the strategic partnership. And this one involves 2 absolute giants, Paychex and Bill, deciding that, it's probably better to work together than to fight to the death. If you're a small business owner, this probably looks familiar.
Managing the finances is this constant juggle between payroll, HR, invoices, taxes, the whole shebang. Now, Paychex was already the master of payroll and HR, but Bill was the king of invoices and accounts payable, and they were slowly starting to eat into Paychex market. So Paychex made a really brilliant move. They just integrated Bill's services right into their own platform.
So is this like Coke and Pepsi joining forces? I know, it sounds weird, right? But it's actually incredibly smart. In one move, Paychex makes its own platform stickier, way harder for customers to leave. And at the same time, Bill gets access to Paychex's gigantic customer base. It's a textbook, if you can't beat 'em, join 'em strategy. And it's a huge win-win for both of them.
So let's bring this all together. What we've looked at are three very different, yet apparently very successful blueprints for how to navigate fintech's brand new landscape. What this really shows us is that there's more than one way to win in the market today. You can sell a powerful, compelling redemption story like Gemini. You can build a rock-solid, profitable business by serving customers no one else wants, like Lendbuzz. Or you can create an unbeatable team by partnering up with your biggest competitor, like Paychex and Bill. And that really leaves us with this final question to think about. In a market that seems to be rewarding all three of these strategies, which blueprint do you think has the most staying power? A great story, a profitable business, or a powerful partnership? The answer to that is probably going to define the next chapter for all of fintech.